Hi there. HMRC's 2026 update on student loan interest may hit freelancers hard. Let me show you what changes do and why.
Hello there. We're about to get into a really important question for UK freelancers, and all the insights today come directly from the expert team at My Tax Accountant. We're going to look at HMRC's rules on student loans and business expenses, but we'll kick things off with a single number that could save you from a very nasty and pretty expensive surprise.
And here it is, £2,000. So why this number? Well, it turns out that earning just one single pound over this amount in what's called unearned income, so things like interest on your savings or dividends, can trigger a surprise student loan bill you absolutely were not expecting. This catches so many people out, and we'll explain exactly how that works in just a bit.
So that brings us right to the core of our conversation today. You see, as a freelancer, you're constantly balancing two different financial worlds, your business life and your personal life. And your student loan, well, it often feels like a business cost. I mean, the education you got is probably what allows you to do your job. But the real question is, does HMRC see it that way?
So here's what we've got on the agenda. We'll start with that really common question from freelancers. Then we'll get into HMRC's golden rule, which is key to understanding everything. We'll bust the student loan myth, and importantly, look at the training costs you can actually claim. We'll even get into a bit of an advanced strategy before we wrap up with your next steps.
Right then, let's start by framing the problem. Because if you've been wondering about this, trust me, you are not the only one, not by a long shot. This is it, isn't it? The classic freelancer's dilemma. You invested a huge amount of money in your skills, and now that investment has a running cost, the interest. It seems perfectly logical, doesn't it? If your degree is what powers your business, shouldn't the cost of financing it be a business expense? It's a completely fair question to ask.
To get to the bottom of this, we first have to understand the single most important principle in the entire universe of business expenses. This is what you could call HMRC's golden rule.
And here we are, the wholly and exclusively test. These three little words create a really strict border between your business world and your personal world. For an expense to be tax deductible, its purpose has to be 100% for your business. If there's any real personal benefit mixed in, then HMRC will usually just disallow the whole thing. This slide does a brilliant job of showing those two worlds side by side. You see, a journey to visit a client, that's business mileage. Your daily commute to your regular place of work, that's personal. A software subscription you need for your work, that's allowable. Your Netflix subscription for the evenings, not so much. HMRC lets you split certain costs, like your phone bill, but the principle itself is rigid. One side is business, the other side is personal.
Okay, now that we've got that golden rule locked in, let's apply it directly to the big question about your student loan. You'll definitely want to hear this part.
So the answer from HMRC is a very clear, very simple no. You cannot claim your student loan interest as a business expense. Now the reason for this goes right back to that golden rule. HMRC sees your degree as a personal capital asset. You can think of it like buying a valuable tool that's going to benefit you for your entire career. The loan you took out to buy that personal tool is therefore seen as a personal liability, not a day-to-day running cost of your business.
So if it's not a business expense, how on earth do you pay it? Well, it's all done through your self-assessment tax return. HMRC works out what you owe based on your total income that's above these thresholds for the 2025/26 tax year. So for example, if you're on Plan 2 and your profit is £38,470, you'll make repayments on the £10,000 that's over the limit. It all gets calculated and added to your annual tax bill.
And we're back to that number from the start. This is the £2,000 cliff edge, and honestly, it's a really nasty surprise for a lot of people. If your unearned income, so that's money from savings or maybe some dividends, is £2,000 or less, it's totally ignored for your student loan calculation. But if it hits £2,001, the entire amount is suddenly dragged into the calculation. That single extra pound could end up costing you an extra £180 in loan repayments. It's a really crucial detail to be aware of.
Okay, so the news about your original degree isn't fantastic, but that absolutely does not mean all training costs are off the table. Not at all. This is where we can talk about what you can claim.
And this table here illustrates the difference perfectly. HMRC is generally happy for you to claim for any training that updates or maintains skills you already have and use in your business. That's considered a day-to-day revenue expense, so a web designer taking a course on new software, allowable. But that same web designer deciding to retrain as an electrician, well, that's acquiring a whole new set of skills for a completely new profession, which makes it a capital expense and therefore not allowable.
And listen, this isn't just a theory. It's actually been tested in court.
In a really important case, a taxpayer tried to claim the cost of a law diploma, but the court ruled that because the diploma gave them a brand new foundational qualification, it was a capital investment in them as a person, not a running cost of their existing business. This case really is the bedrock of why your original degree costs aren't claimable. Right, so we've established the main rules. But for those of you who are a bit more financially savvy, there is an advanced way of thinking about all this. Stay with me. This next point is one most people completely miss, but it actually comes directly from HMRC's own rulebook.
You see, hidden deep inside HMRC's own Business Income Manual, specifically in section BIM 45700, there's a principle about how you can withdraw capital from your business. Now, let's be clear, this is not some dodgy loophole. It's a completely legitimate way of structuring things, and in very specific situations, it lets you use business borrowing to free up your personal cash. Here's how it works, step by step. First, your business has to have built up some capital from past profits. You're perfectly allowed to withdraw that capital for your own personal use, let's say to pay off a chunk of your student loan. Now, if your business then needs cash to operate and it takes out a loan to replace the money you just took out, the purpose of that new loan is purely for the business. And because of that, the interest on that new business loan generally becomes an allowable tax-deductible expense.
But, and this is a really important but, this only works if your capital account stays in credit. If you withdraw more money than you've actually built up, your account becomes overdrawn. At that point, HMRC will argue the loan is funding your personal life, not your business, and the interest will be disallowed. This is definitely an advanced strategy, and it's one that absolutely requires professional advice.
Okay, so that was a lot to take in. Let's try and pull it all together and look at the practical things you should be thinking about right now.
Let's just quickly recap the key takeaways. First, the big one. Student loan interest is a personal cost and is not tax deductible. Second, for any expense to be allowable, it has to pass HMRC's wholly and exclusively test. Third, training to update your existing skills is fine to claim, but training for a brand new profession is not. Fourth, please watch out for that 2,000-pound cliff edge on unearned income. It can be really costly. And finally, number 5, those advanced strategies do exist, but they always need an expert to guide you through them.
And there's a real sense of urgency to get on top of all this now. Making tax digital for income tax is coming for many self-employed people from April 2026. This means you'll be doing quarterly digital updates to HMRC, not just one annual tax return. So having your expenses correctly sorted out in real time will no longer be a nice to have, it's going to be an absolute necessity.
Now, it is really important that we're clear about this. This has been general guidance to help you understand the principles at play. It's accurate as of early 2026, but tax rules can and often do change. So please do not make any financial decisions based only on what you've heard here.
The line between your personal and business finances is clear in HMRC's eyes, but as we've seen, actually navigating it can be pretty complex. Understanding these rules is your first step. The second and most important step is getting advice that's tailored to you. For that, you really should speak to an expert. We recommend you contact the team at My Tax Accountant for guidance on your specific situation, and don't forget to subscribe to their channel for more essential updates. Thanks for watching.